Good evening. Thousands of customers have been queuing up outside branches of the troubled mortgage lender Northern Rock to withdraw their money. Branches stayed open late into the evening as they tried to meet the demand. The decision by Northern Rock to seek emergency funding from the Bank of England marked it as the first high-profile casualty of the crisis in the international money markets, triggered by bad loans in the US housing sector. By the end of the day, shares in Northern Rock had fallen by nearly a third. Gavin Hewitt reports.
Way past normal closing time on a Friday night, the Harrow branch of Northern Rock still open this evening, dealing with queues of people waiting to withdraw their money. From early morning, savers had been pressing at the doors of many Northern Rock branches, waiting for the banks to open.
When you've got your life savings invested, you want to be sure that they're safe, don't you?
There were lines in Nottingham, Hull and London. Across the country, thousands of anxious savers waiting to get their money out.
Well, if they're not in trouble, why are they having to borrow from the government?
Nobody's given an absolute guarantee that the money is safe in this bank.
These fears followed news that the nation's fifth largest mortgage lender had to negotiate an emergency loan with the Bank of England.
Interestingly, most of these savers trying to withdraw their funds have heard the reassurances from the Financial Services Authority, from the government, from the bank itself, that Northern Rock is solvent. But after the recent turmoil in the financial markets, many of these people simply don't trust what they're being told.
While people clutched their savings books, the Chancellor was out and about, insisting Britain's banking system was sound.
Northern Rock is carrying on business in the normal way, and it can do that because we have a stable banking system. It's the part of the Bank of England's job that when an institution has any difficulties like this, then they can offer facilities precisely to allow it to carry on doing business.
So how did this problem arise? Northern Rock was aggressive in lending money to people wanting mortgages. A potential problem was that the bank had relatively few savers. So 3/4 of its funds had to be raised on the money markets. That was fine until recently, when banks cut back on lending to each other because of a squeeze on credit. So Northern Rock had to turn to the Bank of England to ensure it had sufficient funds. Northern Rock is deeply rooted in the northeast. It was a traditional building society that became a very large mortgage lender. Over the years, it's been a big sponsor of local sports teams. Today, the bank insisted it was solvent.
Of course I don't like depositors taking money out, but the Bank of England facility means we can carry on business as normal. So as business as normal, the customers are perfectly entitled to take their money out and deposit new money, and borrowers are entitled to get new loans and repay loans. So it's very much business as normal.
Northern Rock saw almost a third of the value of its shares wiped out today. There were also some questions as to whether the bank had sold mortgages wisely.
The fact is that, like several other British banks, they've been lending very recklessly, multiples in relation to people's income that are far beyond normal prudent levels, gambling on a continued housing boom that is just not realistic or sensible, and the market has caught them out.
The message from Northern Rock today: there's no need to panic. But one fallout from the current credit crisis: there may be fewer cheaper mortgages in the future. Gavin Hewitt, BBC News.
Well, Northern Rock is the first British casualty of the so-called credit crunch, which began in the United States with homeowners defaulting on their mortgages. Today there are warnings that we could now be facing wider problems in the housing market and the economy. Our business correspondent Hugh Pym is here. Hugh.
Yes, Fiona, Northern Rock is just the latest victim of the recent global financial turmoil. There's been a credit crunch with banks unwilling to lend, so borrowing is a lot more difficult. There's speculation that others in the mortgage market could be affected. Bradford and Bingley shares were down 8% today. Alliance and Leicester were down 7%. And there are fears that the housing market could be brought to a juddering halt. So house builders like Persimmon saw shares 7% lower, and Barratt were down 6%. There are signs the housing market is slowing anyway because of interest rate rises over the last 12 months. One survey, a straw in the wind at this stage, suggests house prices fell in August. Now the credit crunch is pushing up mortgage costs even more, and that could put the brakes again on the housing market.
The Northern Rock is just the latest in a succession of events that have been happening in world markets, but what it shows is that we're all going to be paying higher rates for our mortgages, and we're going to find those mortgages much more difficult to get. That in turn is going to have a knock-on effect into the housing market and the high street, which is almost bound to slow as a result.
All that's already happening on the other side of the Atlantic, where the problems started. Overstretched American home buyers defaulted on their mortgages. Lenders, including many over here, were saddled with bad debts. And just to give some idea of the scale of the slowdown, the number of US house sales since the middle of last year is down 16%. Gloomier pundits are talking of an American recession, which could drag European economies down with it. But help could be at hand in the shape of China and India. They're growing at breakneck pace, and that could be enough to keep the world economy ticking over. Policymakers are hoping the credit crunch is short-lived. If it goes on for any length of time, there could be serious consequences for all of us. Fiona.
Thanks very much, Hugh. Cattle at a second.